Welcome to Cash Flow and Tell, the podcast that uncovers answers to your toughest questions about growing your business from a working capital perspective. Hosted by the people of Fund Through, we dive into real stories and lessons from CEOs, finance pros, and business owners just like you. Today, we're covering everything you need to know about private investors for your B2B business. Now, here's your host, Serena Ali, Director of Partnerships at Fund Through, joined by today's guest, Janice Liu, angel investor and entrepreneur.
So we have a lot of juicy topics to talk about today. I know our listeners are growing businesses and they are raising money. They might also be thinking about their own investments. And so to dig into that, we have our wonderful guest, Janice. And, I'm really excited that you're here today because I've followed your career for a really long time. And we've also been friends, which helps too. But I followed you through, the agency world and all the wonderful things that you did there. And then on your entrepreneurial journey and just creating communities on the side, no big deal. So I'm really excited to dig into this topic with you. But first, for our listeners, before we get into all the details, I would love for them to hear a little bit about you, and how Mantis came about. Would love to hear that story.
Sure. So Mantis is the company I run now. I would like to say it's my sixth attempt at entrepreneurship. So it's had a lot of failures in the past. They're not necessarily failures, but they're just like experiences. And now, I'm running Mantis. So Mantis has been around for 3 years. We're actually officially 3 years old as of this November. Yeah, thank you. It's been a journey. Mantis is a completely bootstrapped, no investment company, which is really interesting. Never easy from that perspective. We started this company 3 years ago because of the thesis that we believe that every company is actually a data company, whether or not you like it or not, because you have customers, you have data in the form of content, you have a bunch of different things in which you're essentially utilizing, or it's a byproduct of your business, but it could be generating money for you. Not only money from a top line perspective, but you can use it for everything internally. And then, of course, you can monetize it. So that's the purpose and the theme of our business. I started Mantis because I had been working in advertising and marketing for over a decade. And then my last venture was where I was like more of an entrepreneur, was a company called Magnet, where I worked with essentially the advertising data use case for about 4 years. So I've been in the data world now for over 10, but specifically in the world of commercialization and brokering data has been quite a bit of time as well. So when I left my last company and decided to start Mantis, we actually hadn't seen the inflection point of Gen AI yet. So it was very exciting to see that grow in the past 2 years. But we always knew that the data that any business collects is actually worth a lot more than you realize. So that's kind of how we started it.
It's so interesting, the serial entrepreneur side of your story. I'm sure you've learned so much along the way. And then to see this AI kind of kicker come in, I'm sure that's going to really change your business in some new, exciting ways. So can't wait to keep following you along as you go through that. But I also wanted to stop along the way, right? Talk a little bit about that journey that brought you to Mantis, right? So you sat on both sides of that investment table, both asking for money and also making some bold investments yourself. Would love to hear a little bit about the other part of your life, which is investing and how you got started there.
Yeah, so I've been investing or saving, I would say, and investing my whole life. But I think consciously getting into the startup world and investing at a seed round or a pre-seed round started around 2019. I was at the time still working at Magnet, and previous to that, the agency group that I was a part of, we'd seen essentially this crazy rise of cannabis, right? So these folks that started and came from CBG and started taking over cannabis and getting it legalized in the country. And then shortly after that in 2019, after you kind of see the rocket take off, you start to see, I would say, almost like the opportunity to meet a bunch of different entrepreneurs across different fields. One of these folks particularly was from the cannabis space, and they had moved over to hospitality. And so they came to me and approached me and said, "Hey, would you like to, help invest, or would you like to help us find ways to be able to diversify the cap table?" So most cases, especially on the angel or pre-seed round, you're looking at businesses where it's all about if you know the person or you're an investor that others go. In my case, I was really lucky to have met my friend Felicia, who asked me, "Would you like to join the cap table, and would you like to essentially help us diversify that?" So in that business, we helped them go from, a cap table of very generic investors to 30% women, 20% BIPOC investment. So that was really cool, and our kind of first stepping stone, my first experience going into that. And then shortly after, I think it was also the period economically wise where everyone had a little bit more cash flow. I started investing in many different startups. And so my brother and I run a portfolio where we actually put probably investment across 15 or 20 different startups globally. So not crazy VC amounts and not like I would say family office amounts, but enough for us to be able to dip our toe. And that's kind of how we got into it. But it was a lot of learning, right? Because you get to learn, like, what are the rounds? What do they mean? What are the levels of options? And so it was really eye-opening. The good news is that, we somehow have a pretty good track record. I would say half the companies we've invested in are already at Series A or Series B. And then there's actually quite a few of them that have also gone bankrupt. So it's either one or the other. Toss up.
Right. This is why you diversify, right?
Wait. Fine.
And so, it sounded like that first investment, you had a relationship there, which is
Yeah.
fantastic. What other elements of either that deal or future deals really made you say, okay, now's the time to commit? This means a yes for me.
They say this a lot. I think there's like the intuition of obviously if you trust the founder, like the founder's experience is super important, what they've done before. I have invested in founders who have not exited or not scaled before as well, mainly because the concept is really good. It's very tough at the very beginning where there's no revenue, it's pre-revenue perhaps, it's just an idea and concept. So you're really just trusting, do you understand the concept? Do you understand the vertical? I don't have a team to do like heavy research, and you didn't have really Gen AI at the time to do deep research. So it was honestly just understanding what their projections are, understanding, do you believe in the concept? And then do you understand the team? Like, do you really need everyone here? Right. So yeah, that's kind of it. So it is definitely, I would say, high risk. It's a gamble, and it's really just about the determination of that team, but you can't really predict that.
So essentially, you have to really believe in the founder and the team, and hopefully they have enough of a fleshed out idea
Yeah,
that they're going to bring to market. But it's a little bit of a gamble.
it is a little bit of a gamble because you don't really also know things like product market fit yet. Perhaps they haven't even tested the concept, or they're in pilot, but you don't have results yet. So there is a lot of that, but it's less so the trust that the concept is going to have true fit. It's more so the concept that do you believe this team has the ability to adjust and pivot as the market shows signs back to the product?
And are there like particular questions that you ask them to try to figure that out, or is it really just how they show up and your belief in that individual in that group to make it work, whatever happens?
Yeah, that's a great question. I think at the beginning it was a lot of like, do I trust this person? Right? Do you have a
Right.
good enough intuition to trust this person? Now, knowing what I know, I think the questions are more so actually about the team. It's about like, can you pivot as the times change? Can you adjust strategy and quickly follow that strategy and execute against it, depending on the circumstance and the context? So now I would say my questions are a lot different. My filter is a lot more stringent, I would say, especially because now we're looking, especially the whole world, we're looking at things that are sustainable, right? We don't look at businesses that are just like, can you rocket ship this or hockey stick this, and can I get some sort of return? So my priorities have changed, and I think a lot of investors' priorities have changed.
And I think that's a really great message for people who are going to watch and view this is change is inevitable and that is okay. Pivoting is okay as long as you know where to go and you know what you learned.
Yeah, definitely. And I think it's like the persistence, right? Like the first investment, like Felicia's company that I invested in, it took them quite a bit of time. They didn't hit the milestones they wanted, but they've been pivoting, and it's the perseverance. Like now, 2 years after the initial kind of milestone that they missed, we now have the right kind of funding. We're seeing the trajectory. They're getting the right kind of support, and it's still going, right? And then the
Right.
founders had to take a lot of sacrifice to get it to that point. But that's the balance, right? It's the balance of like, do you believe in the concept enough to persevere through it, in conjunction with, do you have the right support from the market and the right kind of fit to be able to hit it?
And as you go, do you find that, as they're looking for other investors, they're looking for things other than potentially money? Like, are they looking for investors that will bring some new perspective to the business or something else?
Yeah, definitely. I think they are at the beginning. We, as well at Mantis, we have advisors, not investors, that support us because you have gaps, of course.
Mm.
Uh, so I've been not only on an end where I'm just investing, I've also been investing and kind of advising certain founding teams as well around like certain gaps they have that they want to understand. So yeah, a little bit of both.
Yeah, definitely. Very cool. So I also want to talk a little bit about you being on the other side of the table, right? Obviously, there's your whole investment side, and it's really interesting to learn about that journey. I saw a stat that founders that are venture backed typically only end up with about 15%, maybe 30% of equity at the end of the day and when they're finally exiting. When you've been approaching, whether it's Mantis, bootstrapping, or previous companies that I think you had were VC PE backed, how were you thinking about those first rounds and whether to go one way or another?
Yeah, so I would say, like, I'll break this down. I think if you have certain concepts or founders that you believe in and you think that we're going to give you a shot and you're going to be able to invest in that without losing sleep if the money goes away, that's, I think, a big component as an investor. It's like, if the money goes away and it does sink, am I going to be okay? You should obviously never invest if you don't have that. The second part of it was, I consciously chose not to look for investors when we started Mantis for a plethora of reasons. Some of those reasons were because we hadn't honed in on exactly what it is that we want to scale. Is it
Mhm.
services, the product? That's the first thing. And then the second thing is, I have had a lot of experience with product businesses and services businesses, but you may have product market fit at one level, but you may not have product market fit once you get to the next level. So that's the challenge, because you can see really high early indicators when you're doing, let's say, a pilot or even one market. But as you go to other markets and as you try to scale, you have totally different challenges and totally different differences, right? So that's kind of been a big, I would say, awakening moment for me, which is why we haven't gone out to raise yet. So we're getting close to that point, but we want to have that certainty, especially with today's market. I want to make sure we have something that's sustainable, that's profitable, even from the get-go, which I think is really hard for folks to say. And again, part of that is because my belief is, when you try to solve really big problems, you actually add a lot more complexity to what you're trying to product market fit. What we always think about when it comes to product is, can you solve a tiny problem? Can the tiny problem be so easily solved that you embed yourself into that value chain or into that supply chain or into that kind of experience where you can imagine your world without Zoom, let's say, right? So
Right.
what happens is, like, then you solve a very tiny problem and then you can expand your feature set. So it's a very different way of thinking about it, because I now get approached with a lot of founders who go, hey, I have this concept and I want to solve this big problem. I'm like, that's great. It's just going to require you a lot of capital. And why build yourself such a high challenge when you're just beginning the race?
I think that soul searching is really important for, figuring out which way is right. Do you think that, it sounds like you've invested in other companies before they've even really had a product. So how do you see profitability playing into that equation?
Yeah, I mean, I think it's, they have to give you some sort of sense of when they think they'll get to that break even or that profitability point. It is all very arbitrary, like at this point when you don't know. When I do see really early, like, angel investment asks and demands, you do get a concept sense, right? You do get a sense of like what they're trying to build, why they're trying to build it. For me, it's more so now I'm looking at whether or not that problem you're trying to solve is too large for one specific solution to solve. If you have a solution to that problem that can be replicated, not very defensible, or can be solved by many different ways, then I'd argue that you probably need to rethink how big of a problem you're trying to solve. Otherwise, you're framing it too big. It's no different than like a science research experience, right? Which is like my thesis is X, and if my thesis is too far off, then it's not defensible.
I think also you're drawing on your agency background as well, is how do I tell this story?
Yeah.
Right? Like, how do I, understand the story for myself and where I truly fit into this market and the customers that I serve and why I exist. And also how I tell that story to potential investors when the time comes. As you've been going through this crazy entrepreneurship game, did you have some big aha moments in how that story needs to come together to really attract the right person to the table?
Yeah, I think there's like things you can control and things you can't. The things that you can control, to your point, is like the storytelling, but it's not even the storytelling. It's actually just like the discipline, the rigor of telling it regularly. So the way
Mm.
I kind of talked to you about what Mantis is and how we believe every company is a data company, I didn't used to tell that story that way, right? It takes iteration and feedback again and again and again. I probably have told that story over a few hundred times now to know that if I start the story at a different point, it's not going to land because we're talking about very intangible things. And so it's not going to land in the concept of the person you're speaking to. The other part of it is what I mean by the rigor is before starting Mantis, I had 4 years of essentially running a company where it wasn't a public company, but we acted like we were in the sense that we were reporting every month. We would talk to our board every month. And so now, even though we don't have investors, we have advisors, I still send a monthly every month. Right. And it's the habit of being like, here's the story of where we're going. Here's where we're at. Here's what we've accomplished. Here's what the burn looks like. Here's what's in the bank. And it's just this muscle, right? And so again, I'll refer to any sort of services business, but you could win something or win the business on a concept, on a big concept or idea, but you usually lose it when you don't have the proper hygiene, where you don't have the proper governance or the proper discipline, right? So that's the kind of stuff where I'm like, you can totally control for that. So if you start to look for those skill sets and how to practice them, it just naturally makes you show up easier and better. And it makes the other person who's going to invest in your business or listen to you or join you feel that there's confidence in the rigor. And rigor is something that we don't talk about it enough, or the discipline of it, but it's like going to the gym. Like, you have to do it. If you don't do it, then it's like the foundations of how you show up, right?
Yeah, and I think that bringing everybody into the organization along for the expectation of how we show up
Yeah.
is really important too, not only in the financial regiments and how we look at the business, which is also super important pre-profit and post-profit, but also in the storytelling, right? Like, can everyone explain what they do to their parents, to their grandparents, right? Can you explain what the company does? I think we've all fallen into that trap where my mom or dad thinks I work on the internet, right? Like, they don't really know what I do. And I think that is a big part of being able to explain it to a stranger or to an investor is figuring out that right storytelling and having that backing of understanding where the business is that helps you attract the right person.
Yeah, I think on the storytelling front, I get a lot of outreach from entrepreneurs that are like looking for seed or pre-seed. And there's this like glorification and embellishment that is not storytelling. So that's kind of like, I have the thing that's going to solve this. And I'm like, that's a lot of confidence for pre-revenue. And I don't know about you, but again, based on the conditions of our market and the world that we're in today, like, I don't really believe in anything now that's that embellished anymore, hopefully.
Yeah.
And then, so it's more so the groundedness of what is reality. And then the concept that, if you can't explain it well, simply, people don't always have the imagination or the mind capacity to try to meet you at this very conceptual level, right? So it's so important to like work on that and talk about it, which is also why I always tell people who have ideas, like, just because you have the idea doesn't mean 1,000 others don't, but it's never about the idea. It's always about how you execute.
And where you practice, like where you build those habits, like going to the gym, but for your business. Do you think it matters who you test your story out on?
No.
Yeah, just talk to everyone.
I think talk to everyone. Anytime someone goes, "What do you do? Why do you do it?" The more ways you can test communicating that, the better. It's funny, right? Because you can argue that the way you talk about it is the same as even an essence of go to market. If you go to market, which is a whole new practice, a different practice of a new product going to market, if you can't tell that story in a very simple way and you just sound like perhaps everyone else saying the same thing, you're not going to break through. So the testing of it and telling the story, and you can do that not even on a concept. You can talk about like, what do you do? Right. It's kind of like what you're saying, but I work on the internet. Like, how do you talk about it in a way that anyone of any generation can understand?
Exactly. One, I want to like kind of bring this home for people to understand how they can, which avenue, which door should I open as I'm thinking about my business? Do you have some ideas on when companies should be thinking about raising, bootstrapping, or possibly going to a bank?
Yeah, that's a great question. So I'll go backwards. So I think going to the bank is probably your first easy bet. I personally think if founders haven't yet exhausted their debt or financing options, to me, that means you don't perhaps even believe in your product enough. If you have extended that capability and you're willing to even, like I've personally guaranteed a lot of it, if you can do that, like it just demonstrates how much you yourself believe in it. I think the other part of it is we have a very constrained, I would say, banking environment because there's a lot of guarantees required. There is, private funders, there are people in your network who are willing to loan you money with an interest in mind, right? So there's ways of working around that. We have a whole generation of boomers that are sitting on a lot of capital that they are open to essentially loaning money if they know they're going to get a return for it. So there's ways of structuring that that's outside of banking that's not yet financing in the form of investment as well that I think people don't explore. And if you do, that's great. It's just that we don't have the economic environment the way that the Americans do, right? The Americans have a lot more capital in excess, so it's easier to access in many different channels. So I'm just saying there are certain ways here before you get into that investment round. If you are, I would say, focusing on how do you want to get, let's say, investment or a seed round, whether your services or product, it's like a matchmaking game. You need to find the right investor that matches your business risk level, that matches your risk level, that matches your level of detail and what you're willing to trade off in return for their money. Because if they are going to give you money at a very beginning level when you don't have, let's say, revenue or clients yet, they're really believing in you. And so you are accountable to that. But if you have a product and you think you want to hockey stick something, which is really admirable, but a lot of work, you're going to have to think about what kind of investor you need at what level. So an example is if you have a product and you've already seen product market fit and you already have revenue, it may not be profitable, but you already see those indicators from a product market fit perspective. It is actually worth it for you to go and have a conversation with VCs at that point, right? It is worth it for you to actually go and talk to your banks and say, hey, I've been doing this, explain your story again to the bank. And sometimes the banks will even reach out to VCs on your behalf. But again, it's a journey, right? It's a partnership and it's a journey, and it's who do you meet on the way that can help you get to the next step.
There's so much that you can learn about your company by understanding, would I put my own money on the line?
Yeah.
Right. And then how you explain that to others, whether you're looking at a bank or another avenue. And so we talked a lot about both sides. Do you have a standout investment in your mind that you were like, that was amazing? That was the cherry on top of my portfolio.
I have two. There's two founders I met during, I think just before the pandemic or during the pandemic. One of them is the founder of Ash Wellness. I think it's called Ash Wellness in New York. The other one is a company called Yonder in Ireland. They weren't even, I would say, previous founders. They were just really, really articulate about the story and their focus and the size of the problem. So I'll give you an example for the one in New York. It was during the pandemic. They were a group of queer founders that came from Cornell Tech. They wanted to solve for at home, like HIV testing, things like that, STI testing, so that you don't have to go into a clinic to get it done. And they purposely didn't focus on COVID because they didn't want to touch a huge demand or a huge problem, right? They wanted to
Right.
focus on their very niche problem. And so they grew it very slowly in a very scaled, a measured way. And, fast forward to 2025, they've already raised Series A. They now have institutional investors. Tapped into different corporations across the US to essentially close the gap on the healthcare issue there, where you can get at-home testing and your company will pay for you. So that's like a very steady, slow way of doing it, which I thought was really great because at the time, we even connected them with some folks that were doing COVID testing up here in Canada. And they were like, that's great. You're making a lot of money, but it's not our strategy. And so it's kind of like that type of intention and conscientiousness that I'm looking for when it's like, why do you say no to something and why do you say yes to something? And the size of and focus of your problem.
Yes, and also something you touched on earlier, which is, how do you incrementally solve a problem?
Yeah.
Right? It was not going after COVID created a lot of opportunities and a lot of challenges for businesses and for people. What little slice is ownable
Yeah.
that you can grow into and really protect and create an economic moat around?
Yeah, and I think the other part that I see a lot of is I talk about this quite a bit is in our conditioning, like how we grow up and the type of exposure we get when we get into work. Everything is always based on outcomes. So everything is based on an OKR, you're based on an outcome you're trying to achieve, alpha. Like these are goals that are very hard to unlearn when you become an entrepreneur. When you become an entrepreneur, especially when you're building 0 to 1, I say this to my team a lot, but you're sculpting clay. You may think it looks like a human sculpture, but it might look like an animal sculpture. You actually have to be okay with whatever that outcome looks like. And that's how you pivot, right? Because if you get too attached to the outcome, which is the opposite what you're expected to do, especially in business environments, then you get really caught up with this doesn't look like what I wanted it to look like. And so that's not about, changing the intention, the focus on the initial problem. It's about understanding how deep is my initial problem? How do I focus on it? And then how do I essentially let the sculpture sculpt itself as I move along in that process?
Very interesting. I feel like that would take a lot of comfort and really like being firm in your ideals in order to be actually go along that process. What does that look like for Mantis? Where are you in that sculpture?
It's starting to look like form.
Okay.
Like I said earlier, I've been working in the data world for over a decade now. I would say back in 2015, 2016, when I would tell people, I think data is a resource, people were like, well, I know it's oil, but what do you mean? Right? Or do you mean reporting? Do you mean analytics? And so I think the nature of it has changed a lot. So now when I tell people, we believe every company is a data company, whether or not you're a corner store or you're a cab company, people are like, I get what you mean now. So it just takes time also when you have a concept that you believe in. Sometimes it just requires time for the market to catch up. Sometimes you also need to ground like the concept that you're trying to believe in relative to the needs of your customer. So I always, when I talk to founders particularly, it's how often and how close are you with your customer? I know a lot of founders who have like sales teams where the sales teams engage with the customers and the founders don't. And that for me is like you're going to lose grasp on reality real quick because you don't know what your customers want and how they're interacting with the alpha that you're putting in front of them or the beta you're putting in front of them. And it just completely ruins your lens as a founder of what it is you're building because you start to get obsessed with things like numbers and KPIs. And back to my sculpting example, you forget that this thing hasn't been sculpted yet. Right?
Right.
So I'm contrary in that way because a lot of VCs will ask, like, what's the exit? What's your exit plan? I don't know about you, but you can't really control anything in life these days, let alone ever. So I hate that question. But I actually also love hearing back from founders who go, I actually just want to build a sustainable business. I want to build a profitable, sustainable business where we're trying new things or we're doing interesting problems that we're trying to solve, right? So again, that's very contrary to like a VC answer, but again, it's a different sense of who you're looking for, what you're trying to look at when you're investing.
Yeah. And do you feel that, as you're growing your team out and to have, all these distinct roles, like, you might have a CFO and you're obviously the CEO, do you find that different people have to gravitate towards getting that product market fit versus staying laser focused on profitability? Or do you think that that's everyone's job to think
I
about
think
both?
when you're building 0 to 1, it's everyone's job. we were just having this conversation as a team even yesterday, which is who talks to the customer, right?
Mhm.
And the challenge with that is when you're at this stage, even though you're doing one type of task, you need to know what the downstream impact is. You also need to have a collective lens on what decisions you make in your domain and the impact of that onto the collective business and onto the other domains. I think what happens is because we live in such a world where it's my stream, my individual work, this is my IP, you start to get really fixated again. We like to do this on that outcome. But what you don't have is this collective lens that if I don't make a decision quick enough, the next person I pass this to, it's going to impact their timeline. And so the collective lens of how do you get to that level of groupthink at a very small, tight team at the very beginning is, I think, one of the most critical things that you should hone in on. And it's taken us, like, it's not done overnight. None of this stuff is done overnight, right? It's taken us, I would say, 3 years to get to a level of synergy, a level of collectivism that we're still working on and optimizing, but it's much better now. We've done the whole thing where we had actually scaled up to 3 times the amount of people we have now, and it actually doesn't yield better outcomes. It sometimes just yield more inefficiency, especially at the beginning stage, and then you don't have the same kind of group think and that mentality that you need, right? Because you need to be able to pass the baton to the person next to you, know the impact of it. It's not your responsibility to see the impact, but it's your accountability to understand that you're doing something and there is an impact. So that level of collective thinking is really, really hard, and it's not taught. Like, we don't teach ourselves this unless maybe you play competitive sports or things like that, right?
Yeah, I feel like the business side of that is, Rasky or racy frameworks where everyone's like, okay, who's the quarterback? Who's responsible? Who's accountable? Who's in charge? Who do you need to simply like let know what's coming? Who needs to be informed? This has been really exciting conversation. I know we're kind of wrapping up here, but do you have any final thoughts for, entrepreneurs, maybe serial entrepreneurs, or it's their first time on how they should be thinking about staying laser focused on that product market fit and growing their business with raising?
I think the only thing I would probably say is that, especially with the technology advancements we have now, I think we're going to see a whole wave of new entrepreneurs, people who don't need the same skill sets you need before. And I think if you know that and you have an interest in exploring this role, that you should do it now and don't wait. The other thing I was going to say is I don't think of entrepreneurship as a job. Like, I think of it as a lifestyle. So what I mean by that is my trade-off is high risk, sometimes sleepless nights, but I have a lot of freedom. And so it's also to what you were saying earlier, Serena, around like, do you really know yourself enough to know what you're looking for in this lifetime and this experience? Because it's a short one. Like, you're gonna blink and a decade goes by. So do you have the conviction to know exactly what you want in this life experience? And if entrepreneurship is something you're interested in, I think you should start now, because it's better you start now than 10 years from now after you blink.
Yeah, and I think that, with the AI wave, it's more accessible than ever if you've got the drive, right? If you've got that entrepreneurial spirit and you think you've got an idea that can really fly.
Hmm.
Yeah, exactly. Well, thank you so much for joining me today. This has
For having
been
me.
very illuminating, and I always love chatting with you. So thank you so
too.
much.
Thanks.
And everybody, please check out Mantis Group. Do you want to plug your
Yeah.
URL?
Sure, it's mantisgroup.ai.
Amazing. Thanks again, Janice.
Thank you.
Let's go over the 5 key takeaways for you to apply to your business. Number 1, when evaluating companies for investment, investors look for a strong concept with high chance of product market fit, a believable founder and team that can pivot quickly and execute well, and a sustainable business, not just fast, aggressive growth. Number 2, Janice repeated this over and over again. Tell your business story to anyone who will listen. Incorporating feedback and practicing your pitch is more important than storytelling itself. Number 3, even if you can't find investors, find advisors and practice financial hygiene. Send out a monthly report on the state of the business. This should include an overview of where your money is going, accomplishments, next steps, and indicators like cash position and burn rate. This is critical for building rigor into your business and confidence in how the whole team shows up. Number 4, pivoting is critical because you might have product market fit at one level, such as during a pilot or testing in one market, but lose it as you expand to a different market. Your product or business might look different from how you imagined it. And that's okay, so long as you can rally the team and execute. Finally, number 5, start with a bank for funding. Don't be afraid to go out and ask your network to find private investors. You can find an investor without having to talk to a VC firm. Look for an investor who matches your level of risk and is aligned with how you want to grow. And of course, alternative financing like invoice factoring can help too.
Thanks for listening to Cash Flow and Tell. From all of us at FunThrough, we hope this episode got you one step closer to growing the business of your dreams. Make sure to hit that subscribe button. We'll see you next time.